Most middle-class families work hard, earn steadily, and follow what they believe is the safe path. Yet many never reach true financial independence. The problem is not effort, it's strategy. The middle class is taught to focus on income stability, but income alone does not create wealth. Without ownership of productive assets, stability becomes a ceiling. The first mistake, relying only on a paycheck. A salary pays today's expenses, assets pay for tomorrow's freedom. The second mistake, believing a primary home is the ultimate investment. A home provides security and comfort, but it does not always produce income or scalable returns. Another common trap is lifestyle inflation. As income increases, expenses increase just as fast. Instead of investing the difference, it is converted into liabilities. Debt used for consumption quietly erodes wealth. High interest payments drain future investment potential. Every dollar spent on interest is a dollar that cannot compound. Many middle-class investors also chase short-term gains. They attempt to trade rather than build. This introduces risk without creating durable wealth. The real engine of wealth is compounding, but compounding requires time and consistency. Interrupting investments for quick profits resets the clock repeatedly. Another mistake is believing wealth must happen fast. The middle class often seeks acceleration without foundation. True wealth grows quietly, not explosively. The biggest misunderstanding is confusing activity with progress. Frequent decisions do not equal better results. Clear long-term strategy outperforms constant reaction.
Another common mistake is underestimating how much is actually needed for retirement. Many assume small, irregular contributions will be enough. But without consistent strategic investing, the gap becomes visible only decades later. Saving money feels responsible, but saving without investing exposes wealth to inflation. Over time, purchasing power quietly declines. Inflation is silent but persistent. If your money grows slower than rising costs, you are losing ground. Investing is not optional, it is defensive. Income growth alone does not create wealth. If expenses scale with income, net progress stays flat. Wealth requires widening the gap between earning and spending. Another mistake is prioritizing consumption over ownership. The middle class often finances comfort before building assets. Ownership should always come first. Over-monitoring investments can create unnecessary stress. Constant attention increases the temptation to react. Long-term investors check direction, not daily noise. Many concentrate too heavily in one company or sector. It feels confident, but it increases fragility. Diversification protects against unpredictable events. The middle class often limits investments to what feels familiar, but wealth grows faster when ownership expands across asset types. Multiple income-producing assets reduce dependency on one source. A lack of financial education is another hidden barrier. Without understanding risk, return, and compounding, decisions remain reactive. Knowledge builds confidence and clarity. Time moves faster than expected. Many delay investing because retirement feels distant, but the earlier you begin, the more powerful compounding becomes.
Another middle-class mistake is becoming comfortable inside the income cage. A stable job feels secure, but it creates dependency on a single source. True financial resilience comes from ownership beyond employment. Relying only on employer-sponsored retirement plans limits potential growth. While helpful, they are often just one piece of a larger strategy. Wealth requires intentional expansion beyond default options. Upgrading homes repeatedly can delay wealth accumulation. Larger mortgages often replace potential investment capital. Equity builds slowly, but opportunity cost builds quietly. The middle class is encouraged to expand lifestyle with income, but asset accumulation creates leverage for the future. Choosing assets over appearance changes long-term outcomes. Chasing trending stocks feels productive, but most trends fade as quickly as they appear. Long-term index strategies quietly outperform impulsive speculation. Middle-class investors often underestimate diversification across asset classes. Spreading capital intelligently reduces vulnerability. Balanced ownership builds sustainable momentum. Procrastination is another hidden cost. Waiting for the perfect time often misses years of compounding. Time in the market matters more than timing it. Many underestimate the power of small, consistent contributions. What seems insignificant today multiplies over decades. Consistency is more important than large, irregular deposits. Spending on experiences is not wrong, but repeated consumption without parallel investing slows wealth creation. Balance determines financial trajectory.
The middle class often thinks short-term because bills feel immediate, but wealth requires long-term framing. A 20-year plan transforms financial direction.
Another mistake is not tracking net worth. Income and expenses matter, but net worth reveals the real picture. What you own minus what you owe determines financial direction. The middle class often accumulates liabilities disguised as success. Cars, larger homes, and financed upgrades feel like progress, but true progress shows up in asset growth, not expense growth. Fear during downturns leads many to stop investing, but downturns are often when long-term wealth is built. Avoiding temporary declines can mean missing future recoveries. Consistency during uncertainty separates builders from reactors. Automatic investing removes emotional interference. Discipline compounds faster than fear. Another mistake is relying solely on earned income. Building even a small additional income stream increases investment capacity. Multiple income sources accelerate wealth creation. Without allocation strategy, investing becomes random. Random investing leads to inconsistent results. Structure increases predictability over time. Too much conflicting advice creates paralysis. The middle class often jumps between strategies without commitment. A clear personal framework prevents constant switching. Having written investment principles increases discipline. Rules protect you from emotional decision-making. Clarity creates consistency. The middle class often underestimates long horizons. 20 years of steady investing transforms modest savings into meaningful wealth. Time magnifies discipline. Volatility is not the enemy. Lack of preparation is. A structured plan turns uncertainty into manageable risk.
Wealth is not only about numbers, it is about security, options, and time with the people who matter most. The middle-class mistake is thinking stability alone guarantees that future. Savings without investing grows slowly. Investing with consistency accelerates exponentially. The difference becomes dramatic over decades. Every financial decision carries opportunity cost. Money spent today could have been invested for tomorrow. Small choices repeated over years determine financial class mobility. Wealth follows a sequence. Income creates surplus. Surplus invested creates assets. Assets create freedom. The middle class does not fail because of lack of effort. It struggles because it underutilizes ownership. Owning productive assets changes financial trajectory permanently. Long-term thinking transforms average income into extraordinary outcomes. The earlier you shift from consumption to ownership, the greater the compounding effect. Time rewards those who start. Financial education is the true leverage. When you understand money, you control its direction. Knowledge breaks the middle-class ceiling. The middle class often reacts to headlines. The disciplined investor reacts to strategy. Control your response, and you control your outcome. The mistake is not earning too little. The mistake is not converting earnings into ownership. Shift from income focus to asset focus, and the results compound. The middle class mistake is subtle but powerful. It prioritizes comfort over ownership, stability over strategy, income over assets. If this channel helps you think differently about money and build long-term wealth with structure and discipline, consider subscribing for more strategic investing insights. We don't chase noise here, we build foundations. I'll see you in the next video.